Nvidia stock is down nearly 5% from its all-time highs. Now, in today's episode, we're going to look at a lot of different topics for Nvidia, their bull case, their bear case, one thing Nvidia investors should keep a closer eye on, and my overall expectations and estimations of where the stock could be in the next 5 years. So let's take a closer look in today's episode. So first, let's explain Nvidia. Nvidia is the massive king of AI, you can say at the moment. And the main reason is it has done an amazing side on becoming a strong hardware semiconductor company, a strong software company, and a strong integration of systems company. And what do I mean? First, Nvidia used to be known as just a gaming company with their GPUs. Now, the great thing about GPUs is they are really good at certain type of processing. That certain type of processing actually is what made AI what it is today. And it is the main reason a lot of AI solutions are run on a form of AI accelerator that is similar to a GPU. Now, Nvidia kind of saw a lot of this, and Jensen, the CEO of Nvidia, saw a lot of this movement ahead of time, and it started early investments into things like creating a software moat, into creating the ability to not just be a one-chip company. Nvidia designs multiple companies throughout the year. It has CPUs, it has GPUs, it has networking solutions like DPUs, it has other types of products like networking switches, like optical switches, and that is why it has become a system integrator where no longer it's just, hey, I'm going to sell you a chip. Instead, I'm going to sell you a system so you can build this massive AI infrastructure that you need to train, to inference all these amazing large language models today. A little bit of information, Nvidia only designs its chips. It doesn't manufacture. All the manufacturing of its chips and its servers go to its partners. Now, we are just coming off from earnings, and the company did show some interesting numbers. And unfortunately, the company also did mention some headwinds. So for the first quarter, which ended on April 27th of 2025, they had $44.1 billion, up 12% from the previous quarter and up 69% from a year ago. On April 9th, unfortunately, a little bit before the quarter ended, the US government did create a new export restriction for a specific type of chip that was going to China. And with this new type of export restriction, it eliminated a huge market opportunity. Now, looking at the overall markets that Nvidia hits, data center is the bread and butter for this company. Revenue was $39.1 billion, up 10% from the previous quarter and up 73% from a year ago. Gaming and AI PCs were $3.8 billion and up 48% from the previous quarter and 42% from a year ago, as the company is releasing new forms of GPUs for the consumer market. Now, the professional visualization first quarter revenue was $509 million, flat with the previous quarter, but up 19% from a year ago. And the automotive and robotics segments is the first quarter of $567 million, down 1% sequentially, but up 72% from a year ago. Now, with all this excitement with AI, Nvidia is building up its cash position. Cash and cash equivalents and marketable securities were $53.7 billion, up from $31 billion a year ago and $43 billion a quarter ago. So it grew its cash and cash equivalents by about $10 billion in a quarter. The main reason is this company is able to have cash flow from operating activities of $27.4 billion this quarter, up from $15 billion a year ago and up from $16.6 billion a quarter ago. Now, the company is using this cash to return to shareholders. It did about $14.3 billion in dividends and buybacks. Most of that was actually buybacks. 14.1 out of the 14.3 were buybacks. The other 300 or 200 million or so were in cash dividends. So the AI market is pretty much a new technology and a new market of how big capital and big tech are investing in. But there have been reports like companies from AMD that expect this market to grow to at least a $500 billion total addressable market by 2028. Now, that is insane growth, and this is where a lot of NVIDIA investors are keeping their eye on. Now, NVIDIA itself believes that the kind of capital expenditure of data centers will eventually hit $1 trillion annually of expenses on data centers. So you can see that there is a lot of tailwinds if these market projections by AMD and Nvidia are true. Now, I want to take a closer look at the bull case, and I'm going to explain 4 bull cases that Nvidia investors should be pretty excited about. First is just AI innovation, right? AI innovations is hitting so many different markets. What happens when AI innovation starts to really grow the robotic space, or AI agents to be able to do tasks for you at work? Autonomous vehicles is extremely close. AI in healthcare, a market that has has a massive shortage of work employees, and nearly every other sector. The main thing is, with this AI innovation, you need a lot more inference and more tokens, and that's where you're going to need a lot of AI GPUs, because imagine the world where everybody is running AI nearly 24/7. Now, the second growth opportunity here is sovereign AI, or sovereign customers, and this is individual countries building their own AI infrastructure. Here we already see the United States being a massive AI player and building its own AI infrastructure with the Stargate project here. But not only here in the United States, we just recently heard the UAE is announcing a massive AI infrastructure build out. You're seeing other places like Japan, like India, other parts in Europe, all trying to build their own AI infrastructure. And that means that governments, private entities, and private cloud service providers are going to be investing dramatically in forms of AI infrastructure. Now, I want to talk a little bit about the bear case, because no matter how bullish one can be for the market, there's always a bear case. And to me, the first bear case is competition. While Nvidia obviously is moving on, competition also isn't slowing down. You have companies here in the United States that are trying to provide AI solutions like AMD. You have Chinese players trying to design AI chips as well, like Huawei. And you have big tech players trying to find ways to reduce their dependency of Nvidia. So the competition is there. Next is power infrastructure. One of the biggest bottlenecks that we keep hearing about the AI market is that there is not enough power in the grid to be able to power the type of infrastructures that we need. So if we do kind of get into that bottleneck a lot quicker than most are expecting, that could create a slowdown in growth. Number 3 in the bear case would be a slowdown in AI innovation. The reason I say that is right now, the reason many are investing dramatically in AI is because you need more compute power to do the next thing or to serve the next model. But if there is a slowdown in AI innovation, then the current chips that are being used would be more than enough. So as long as AI continues to innovate, as long as Nvidia continues to make its chips better and better, then the market will be there. But if there's ever a slowdown in this curve, that could be seen as a risk. Number 4 is supply chain. Nvidia's AI server machines are thousands and thousands of components long. They depend on a lot of companies, from things like screws to something as crucial as memory, which is a very advanced type of chip. Now, if there's any hiccups in any of these supply chain markets, that could create a slowdown for Nvidia. And finally, I'm going to say export restrictions. As we saw for the Chinese market, export restrictions lost them a huge amount of total addressable market in just a few quarters. Now, I want to take a closer look at one thing to watch. And for me, the one thing to watch is its overall data center segment again. So data center revenue needs to continue with that sequential growth throughout the next few years. More importantly, margins needs to stay above that 70%. Anything below that can start to bring a lot of negative sentiment of what's happening with the stock and if investors should worry. Now, I'm going to go with my prediction. And obviously, you can tell that I am very bullish in this market. And I'm going to say that this company, for the next 5 years, as long as AI innovation can continue to grow, I believe this company can give you 15% compounded annual growth rate for the next 5 years. Now, with the stock sitting at about $140 right now, a 15% compounded annual growth rate would be over $280. This is going to be my base case that by 5 years, this stock will easily double. And I believe the risk to reward ratio is there for long-term investors. Regardless, though, in the short term, there is going to be a lot of volatility because the AI market is new. Any new news on regulations, on tariffs, or anything slowing down the overall capital expenditure in the short term can create massive volatility for the stock. Now, I hope you enjoyed today's episode. And if you want to learn more, make sure to check out fool.com/invest to get some great information on how to get some of the best stocks to invest right now. And let us know in the comments below if you found this video helpful and what are some other stocks you want to see us tackle next. Take care and see you all next time.